Welcome back to Alpha Recap, your after-hours digest of the market beats that mattered today. Markets closed and we've got a lot to unpack, so stay with us. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, happy to be here. Big day of headlines. Legal notices, an AI tie-up that made waves, and a relief rally in streaming. Let's dive in.
Markets closed mixed today, with gains in some big media and AI-linked names, and weakness in a few crypto and leveraged small-cap flows. So, what really stands out here is the mix of headline-driven risk and technology partnerships that are actually reshaping business models.
Yeah, absolutely. We can split this into 3 or 4 clear themes. Litigation and regulatory spikes, the NVIDIA partnership that everyone talked about, governance moves, and some flow-driven volume action. Which one do you want first?
Let's start with the legal stuff. It was pretty broad today. Notices and potential class actions popped up across a number of public companies, from sports data names to biotech, life sciences, and logistics. So, what really stands out here is how concentrated a lot of these are in smaller caps.
Right. And the other thing is the mechanics. When law firms flag lead plaintiff deadlines, that usually means litigation risk is moving from rumor into procedure. That procedural step alone can push volatility up for the affected names.
Specifically, there were lead plaintiff deadlines announced for a couple of these. One deadline was July 17, 2026. And another was August 3, 2026. Those deadlines mark when plaintiffs need to step forward to lead a case. Again, a catalyst. And then there was a pretty material governance and accounting issue at a major logistics company that admitted years-long improper accounting and has already seen executive departures. That one raises the chance of restatements, SEC scrutiny, and a re-rating for peers if the problems are deep.
Yeah, that tracks.
I mean, when you step back and look at this, smaller and mid-cap names tend to feel the pain hardest because liquidity is thinner. So headline risk can blow out implied premiums quickly.
Exactly. And the practical takeaway for listeners is to watch SEC filings, Section 8Ks, and any restatement notices. Those are the next procedural moves that usually change valuations or risk profiles.
Moving to the second big theme, the AI partnership. There was a notable announcement tying a major AI stack to a physical AI platform that runs on more than 2.4 million devices. That got a lot of attention.
Hold on, say that again? More than 2.4 million devices?
Yep, more than 2.4 million devices. The deal pairs the AI stack with a widely deployed device fleet and included a strategic investment by the chip and AI company. The investment size wasn't disclosed, though, which leaves some questions open about near-term balance sheet effects.
Right, so the headline here is not just product integration, it's about monetization at the edge. Device-level services, retrofit software, recurring revenue. If you can turn cameras and sensors into subscription services, that changes the revenue mix for physical security players.
Analysts are calling this a potential acceleration of edge AI pathways. It frames physical security as a high-volume channel for AI deployments, which could echo through sensor suppliers, edge compute vendors, and system integrators.
Yeah, and interestingly, the announcement signals strategic exposure to the broader AI ecosystem, rather than just being a chip sale. It's ecosystem anchoring.
Exactly. Now, no one disclosed the exact investment amount, so short-term capital structure effects are unclear. What you want to watch for are follow-on disclosures that quantify pilots, recurring revenue, or device-level pricing.
Honestly, I was a bit surprised by this one.
It does feel inevitable in retrospect. Big AI firms looking for on-ramps into physical networks. Switching gears to governance and leadership. A major bank named an acting general counsel, which is notable for governance watchers even if it didn't change near-term guidance. At systemically important institutions, the general counsel role can shape compliance posture and legal oversight.
And tying that back to the logistics company with admitted accounting errors, governance events like executive departures and public admissions tend to have a longer duration effect on cost of capital and trust with counterparties. So those are meaningful even if they aren't immediately quantifiable.
Right. Analysts often treat governance breakdowns as a re-rating risk, not just for the single company, but sometimes for a peer group if the issue implies systemic control weaknesses.
Short reaction. Big move.
On the trading and flow front, a few intraday moves mattered. An airline finished the day up about 0.8%, trading heavy. Momentum there after a strong quarterly print. A major streaming company climbed about 3.9% after takeover rumors were refuted, which cleared a headline-driven overhang and pushed the market back to fundamentals like subscribers and margins.
And crypto-linked flows were active. The Bitcoin futures ETF finished down about 2.6% on heavy volume, and a small-cap inverse leveraged ETF slipped about 1.5% on very high volume. Those kinds of moves can amplify intraday swings in small-cap exposure and thematic baskets.
Right, and if ETF volume stays elevated over multiple sessions, that can mean a thematic rotation or sustained risk-off in related sectors. Traders should watch whether volume persists beyond the headline day.
So what really stands out to me is how quickly sentiment can flip when takeover chatter is debunked. It just refocuses the discussion on subscriber trends and margin trajectory.
Good point. On product and commercial updates, a few names launched new tools or products. A spatial biology tool rolled out in Europe with a certified provider. A component maker introduced a magnetic rotary encoder chip aimed at robotics and precision motion. And an automaker reported June sales up about 18% year-over-year, with one model up roughly 33%.
Those are the kinds of operational updates that need follow-up data to move valuations materially. Product launches are momentum signals, but you want revenue or order book confirmation.
Also, an integrated resort in the region made a best-in-class index for the 6th year running, which is a small but real signal for ESG flows into that market.
Right. Brand and ESG awards often attract passive flows or index-driven demand, even if the immediate financial impact is modest.
Quick hits to flag. An online auction of CNC assets that could affect the used market for aerospace and medical machine tools. A selection for a state care fund that could create recurring admin revenue down the line. And an early-stage fellowship backing a neurotech prototype for drowsiness detection. Most of these are operational or early-stage signals, not immediate earnings movers.
Yeah, and market participants often treat those as potential catalysts if follow-on disclosures come through. So they're worth watching, but not all are instant shocks.
Patterns we noticed across today's flow. First, a pronounced litigation cluster that suggests elevated event-driven legal attention in 2026 and likely headline-driven volatility for affected names. Second, further expansion of the big AI firms' ecosystem, anchoring across software and devices, not just chips.
Third, active repositioning in ETFs and volume-sensitive instruments, which can amplify intraday correlations. And fourth, ESG and branding moves continuing as incremental perception plays for investors.
So, when you step back and look at this, the market day was a mix of structural shifts and routine headline risk. Some stories are strategic and long-term, like the AI tie-up. Others are procedural and acute, like the litigation notices and governance fallout.
What should listeners watch tomorrow? First, filings. Look for court filings, lead plaintiff motions, or restatement notices tied to the litigation names. Those are often immediate re-rating events.
Second, any follow-ups from the AI partnership, disclosures that quantify investment size, pilot deployments, or revenue-sharing terms could materially change the story for adjacent software and IoT names.
Third, check how the streaming name trades and whether analysts re-anchor valuation commentary now that takeover chatter was removed from the narrative. And fourth, watch whether volume persists in the crypto and small-cap ETFs. Sustained activity there would suggest a broader thematic rotation.
Quick reminder, none of this is investment advice. This recap is informational only. Analysts note risks and catalysts, but listeners should consult their own advisors and primary filings before making decisions.
Yeah, exactly. And to end with a few clear takeaways. 1. The litigation spike means headline-driven volatility is likely to stay elevated for certain small and mid-cap names. 2, the AI partnership is a strategic signal that edge AI commercialization is accelerating. 3, flow and volume matter today. Watch whether that persists.
All right, that wraps our recap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Catch you next time on Alpha Recap.